Hello friends, welcome back to my channel Banking Digits. My name is Shoikat Maji. Today in this video we will discuss about what is transferable letter of credit, what are the parties involved, mechanism of transferred letter of credit, transferability conditions, benefits and risks. Before starting the presentation, for better understanding, let's know what transferable letter of credit when transferable letter of credit is used in simple terms. It's actually it is used when there is more than one beneficiaries involved in a transaction. Now when it is possible, when there is an intermediary trader is involved. Trader is purchasing goods from a party and selling to another party, and in between he is keeping his profit margin. So here trader will receive the LC from the final buyer and transfer part or full LC to the seller, who is termed as the second beneficiary. Now let's start the presentation for better clarity. A transferable letter of credit is a financial instrument used in international trade to facilitate transactions involved multiple parties. It provides a payment guarantee from a bank to the seller on behalf of the buyer and allows the original beneficiary, usually the seller or exporter, to transfer all or part of the credit to one or more second beneficiary. Who is the second beneficiary? Typically the supplier or subcontractors. Here is a detailed explanation of its components and how it works. Well, first let's know what are the parties involved here. First is applicant or buyer, the party requesting the letter of credit from the bank, that is called applicant or buyer. Next is issuing bank, the bank that issues the letter of credit at the request of applicant. Next is beneficiary, which is the seller or exporter, the initial recipients of the letter of credit who can transfer it to the another party. Now there is second beneficiary, one or more parties to whom the transferable letter of credit can be transferred, that is supplier or subcontractors. Now we will discuss about the mechanism of transferable letter of credit. The buyer and seller agree to a sales contract that specifies payment via a letter of credit. After that, the buyer applies for a letter of credit from their bank, that is issuing bank. After which the issuing bank provides the letter of credit to the seller, guaranteeing payment upon presentation of specified documents. Now the seller as the beneficiary has the right to request the issuing bank to transfer the letter of credit or a portion of it to one or more second beneficiaries. The second beneficiaries then can present their own documents to receive payments directly from the issuing bank. Now we will discuss about the transferability conditions. The letter of credit must explicitly state that it is transferable. Next is transfers are usually done through a transferring bank, which may or may not be the same as the issuing bank. Next is the terms and conditions of the letter of credit must remain unchanged except for the amount, unit price and expiry date, which can be reduced to match the new terms agreed upon by the second beneficiary. Now let's discuss about some of the benefits of using transferable letter of credit. For seller, what are the benefits? It enables them to source goods or services from supplier and ensure payment without using their own funds. And for the buyers, provides assurance that the seller will fulfill their obligations since the issuing bank guarantees payment. Now for supplier or subcontractors, it ensures they receive payment directly from a reputable bank, reducing their risk. Now, as we discussed about the benefits, we should also know about the risk and considerations. Point number one is complexity. This process of transferring letter of credit can be complex and requires careful management to ensure compliance with all terms. Now, next is documentation. The accurate and timely documentation is critical to ensure payments are processed without delays or disputes. Now, next point is bank fees. Multiple parties at transfers can lead to additional bank charges and fees. So, in summary, a transferable letter of credit is a versatile tool in international trade that helps manage risk and ensure smooth transactions involving multiple parties. It provides security to all parties involved by leveraging the creditworthiness of banks and the enforceability of documentary conditions. Thank you so much for watching this video. I hope you enjoyed it and found it helpful. If you have any doubts or questions, please feel free to ask in the comments box below. I'll be sure to get back to you. If you like the video, don't forget to hit the like button and make sure to subscribe my channel for more insightful contents in future. Your support means a lot and helps me to keep creating great content for you. Thanks again for watching, and I'll see you in the next video. Bye bye.